guys, welcome into the Energy News Beat podcast by Sandstone. We are excited to be back with you. If you're a follower of our daily show, never fear, we're back. We took a little of a hiatus, but like a phoenix rises from the ashes, we are back and free from the chains of corporate censorship. We are back once a week now, much more of a longer form. I'm excited to be here, guys. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Bear Country, attempting to stay alive, fighting off death on a daily basis, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. How you doing, man? My back is sore from all that cement work you made me do last week.
We had
legitimately sore.
You know, we are back. It is a great day in the neighborhood here in Bear Country, and I got to admit, our team building exercise of 1,500 pounds of cement work, you and Connor were fabulous. We were a team building machine out there doing all that cement work.
Yeah, no, it was
rock solid.
No, I'm sore from it, so I'm 80% today, guys. First show ever, and on this new format, and I'm playing at 80%. But yeah, I mean, really, what my plan is for this podcast is pretty simple, guys. We had the daily show that to be honest with you was a lot of work. As Stu said, we are extremely busy right now, but we want to keep giving you guys sort of, you know, our version of just the honest set of news that's going out there. We try not to put a spin on it. We try to give you guys, here's what we're seeing from a macroeconomic standpoint, from an oil and gas standpoint specifically, because we do a lot of work in that. But from the whole thing, so I mean, we have chiropractors as our clients now, guys. So I mean, we're beginning to branch out everywhere, and all of this stuff does affect each other. I mean, you know, Stu's the first one to tell you guys digital integration is one of the is huge. It affects everybody. So you know, we're gonna stray a little bit from there. We're obviously gonna be focused on energy. But you know, forgive me if I stray time. You're gonna get us once a week. But this also is gonna allow us to interview some people. And if you guys haven't heard Stuart Turley interview anybody, he's a natural. He's great. He gets the best out of people, and
I'll pay you later.
No, we unfortunately can't go get the old recordings due to some legalities, but we will. We could, but we're gonna start cranking out. We have two Canadian energy experts, Heidi McCullough, who's the director of communications over, I forget the company she's at, to be honest with you. We also have Terry Elam. He is a reporter and an author at the BOE Report, which is a fabulous, in Stu's words, fabulous Canadian energy news company, like the Energy News Beat, which the show is sponsored by and the name of. Guys, if you need all of your energy news and all of the news you get off the show, please www.energynewsbeat.com. All right, Stu, what do we got today? I think we need to do a catch up. We've really stopped doing these podcasts. You know, the old regime, we were doing them once. We had about a once a week thing going. But it was really about January when we stopped. We had some daily shows leading up, but I think we need to catch people up on a macro level over what sort of happened. I think, you know, from an economic standpoint, from an oil and gas standpoint, and then I know you've got some stuff internationally. I do want to talk a little Bitcoin because a little bit of a rant on Bitcoin.
I can't wait to hear a Michael rant. Yes,
I'll up at some point. But I think I think what's best to do right now is give a quick kind of not State of the Union, but just state of the field. What's going on? I think we'll start macroeconomically, and Stu, you know, you feel free to chime in here, but what we've seen since January is continued quantitative easing by the government. I think, you know, coming out of 2020, the sign was okay with the vaccines beginning to roll out. Remember, January vaccine rollout was not. I mean, we've got a third of the country vaccinated right now, which is pretty incredible to think about, considering that about a year ago, these things didn't exist, and now you have a third of the country's been fully vaccinated, which is pretty crazy to think about. And so the economy has begun to really open up. What's interesting is we've now seen a new Joe Biden and has taken over the White House. The Democrats are now in control. And we saw another stimulus, which injected more cash macroeconomically into the system. And we've got this infrastructure bill that's sort of out there that I don't know what's going to become of that. Do you have any updates on the infrastructure bill? Where it's setting? Well, just where it's at. Like, I know,
well,
is it still in discussions? I know they announced it, and then what? It's just in the ether.
It's kind of in the ether right now because it is, such a porculous bill. I believe that we do need the infrastructure, but after the last ones, they're having to go out and sell it. And I really believe that there's a lot of good things in there, but in the infrastructure bill, Michael, there's less than 10% of it for infrastructure. So if we were going to have an infrastructure bill,
you tell me there's pork in this bill?
oh, it's a porculous bill like you wouldn't believe. I'm all about the disproportionately impacted communities, saving the poor people. Let's get our great U.S. going again, but I'm not about pork. So, I hope they wait on it a little bit.
They will. I don't think they're going to be able to jam it through. But
I love me some bacon, Michael. Love bacon.
and all of this spending. So all of this spending has also been going on still at the Fed. We've seen continued quantitative easing. Stock markets are at a record all-time high. Records. I mean, we're talking oil's at $63. I'm looking at it right now. Oil's 61.92. But hey. Stu, what's the S&P behind you? 41? What's it? 41.60?
41.86.24.
41.86. I mean, look, 41.86, guys.
Man.
Was it 37 at turn of the year? 36?
Yeah, it was something crazy. But fundamentals, Michael, when we sit back and go, you and I have talked about fundamentals last year on our podcast. Throw them out. I have no clue. I'm old. I don't know any fundamentals anymore. Here's the problem. You can't print money the way we've been printing in the former administration and this administration. The world is printing money and inflation is coming like a freight train. I don't care what you say. Fundamentals are coming back into play with inflation. People are going to have less spending money in their pocket. And
I don't think it's less spending money in the pocket. Inflation is the opposite. Inflation is,
but we also have taxes.
You keep making the same amount, and your dollar is worth less. You don't get a raise, but now all of a sudden your cost of living is 10% more. That's inflation.
Your spending, your disposable income goes down.
Yes,
that's what I said.
You said, okay, we won't parse words here. But yes, inflation is coming. You already see it. I mean, you see it in everyday items. I don't, the Fed's come out and said it's at 2%. Yeah, I don't buy it. I mean, if anyone with a brain.
I mean, you've laughed at me so long, Michael, about my views on inflation. When I put that Kenny Lay thing, you said, "Oh, Stu needs a wheelbarrow for inflation." All right, that was funny when I put that meme out there that was a motorized wheelbarrow, and I was right, Michael. It's coming.
To what degree, though? I mean,
horrible.
I agree with you. Are we going to see 4, 5, 6, 7% inflation?
Worldwide, aggregately or worldwide, you will.
Well, I mean, worldwide, there's some places that are having terrible. No, I mean,
it's horrible, dude, because the poor folk in the third world and even the first world countries are absolutely going to go bonkers because of printing money. That is one fundamental that cannot change. You print money, inflation comes. It's going to get bad. Everybody says, "Oh, it's not going to happen." I'm ranting for a half second, dude.
Yeah, I mean, no, I mean, you've been on this inflation train for a while.
And how does that impact energy, Michael?
Well, it's actually good because it means more capital. Because inflation, what does inflation mean from a practical standpoint? The supply of money increases. When the supply of money increases, it flows from it comes from the Fed, because they're creating money and injecting it. They stop buying bonds, they sell bonds.
Right.
Or excuse me, they buy bonds. My bad. They're buying U.S. Treasury bonds. And they become a net buyer versus a net seller. So all this money then flows to who buys U.S. Treasury bonds, or who holds them? Large institutional banks. And these large
Exactly.
institutional banks take this money and they inject it into the economy by lowering interest rates, keeping interest rates really low. Well, who do interest rates really affect? Not me and you, Stu. Your mortgage rate is slightly assumed, but mortgage rates are 2.5%. If you're a
Yep.
bank, you get it for zero. So there's the bank fees right there. You can now see the bank fees. They're there, 2.5%. Now those are all-time lows, but we also have 0% interest coming out of the Fed right now, which means if you're a large bank, you can borrow money from the Fed at a 0% interest rate.
Right.
Okay, so inflation goes up. That means the supply of money is continue to go up. That money has to trickle down somewhere, and heavy capex industries tend to do very well in inflationary times because money has to flow somewhere. Now, because that also corresponds with very high oil prices as the value of the dollar goes down, the value of oil goes up, and you're going to see them crisscross. I mean, there's a very good argument to be made. If you had to put a gun to my head and said, Michael, you need to gamble on either $200 oil or $5 oil by December of 2021, I would rather gamble on 200 than the 5.
Oh, absolutely. Now, here's one thing to throw into this mix, and that is what happens during it. No matter what we talk about, Michael, what happens during high inflation times? Even though oil prices may go up, you know, number one thing is the disproportionately growth in people's income goes down, and the richer get richer, and the poorer
Purchasing
get
power
poorer.
goes down. Their income doesn't go down. Their purchasing power, what they can
But
do with the
but
same
Michael,
income, goes down.
that's what I'm saying is the rich get richer, and I said the poor get poorer. Period. It is
I
a
agree.
problem, and that's exactly what I was saying. So the rich get richer, the poor get poorer right now.
Yes, wealth inequality goes up at times of inflation. And, they want to raise the corporate income tax. They want to raise capital gains tax to 45%.
Yep.
It's pretty funny. I saw this meme. It was like such a boomer thing to do. Set capital gains rate low in the 60s and the 70s so they can acquire property for free, accumulate all the power, vote themselves into office. Once they've already cashed out of the stock market, make capital gains 45% so nobody else can do it. It was like it was this meme that was just outlining like the
Wow.
strategy that's happened of like it was easy to get a home in the 60s. These people then made all this money. They invested in the stock market. They cashed out. They voted themselves in, and now they want to reign capital gain. 45% cap gains rate. That's the other thing that they're proposing. I don't know if it goes through,
No.
but so from a macroeconomic side, it's spicy, and we would say it's frothy. On an oil and gas side, it's honestly been quiet. We've had one deal. We had the Double Point Pioneer deal, which is the ultimate gambler's M&A deal. I mean, because
Why is
think
that?
about it. What did Double Point? What is Double Point besides this merger? What were they famous for, Stu?
Feed me.
You don't remember this? You don't remember when
No.
former President Trump flew out to Texas to visit a rig?
Oh yeah.
Do you remember where he went?
Yep.
Double Point Energy, because they were one of the few private equity backed companies still drilling in the pandemic. This was like June, July.
Wow.
Okay. And so what I mean by that is these guys made a conscious decision, and this is sometimes why private equity is helpful, because you don't have to subjugate yourself to other forms of equity raising, whether it's debt or equity. Capital raise. But these guys made a conscious decision. We are going to drill wells because we have the cash to. We're going to be able to drill these wells in COVID at like probably a 30-40% discount because everyone wants our work. We're the only rig in town. We're the only company in town, and we can get whatever. We can get some really good pricing. And we are going to gamble that come this time next year, oil prices are going to have stabilized somewhere where we will get bought for a premium.
Right.
That's exactly what happened. Some would say that's a smart gamble, but it's a gamble nonetheless because you don't know that. Like, I mean, oil, there's a case to be made for $5 oil.
Yep.
We know the guy, hashtag hot take of the day. We know, we know that case. I don't necessarily subscribe to that thesis because I just think it's an easier case to be made that oil should be much higher than it is due to inflationary factors. And
Yep.
I don't even think inflation is that bad. I think it's bad. I think it's probably 3, 4, 5%. Do I think it's the 10, 15% that, Stu thinks? Probably not. But it's more than 2. It's clear.
You bet. What has been a worldwide issue going on, Michael, is the change in the majors. The majors have really changed. That let's take an example from an MBA kind of a study on BP. BP is divesting itself of all U.S. things. It's divesting itself of oil and gas as much as they can, and then they're going into becoming an energy company. What that has done is Saudi Aramco on the right-hand side, we've talked about this a bunch, and they said, we're going to do both. BP is saying we're only going to do one. So you're having fewer and fewer people that are going out there and saying, wait a minute, we're not going to be EMPs. So you're going to see that. And I'm also seeing some really goofy numbers, Michael, that they're saying oil has peaked and it's now going down. I disagree. There's numbers out there that we're going to talk about in the next few months. The more we go green, the more oil we're going to use. Go figure that one out. I guarantee you it's going to be nutty. So less EMP companies are coming around the corner. You got BP, you got all these other ones leaving it. Then you got Saudi Aramco and these others. Then you have the new contract with Iraq and China. They're pumping everything out of there. So there's a lot of things playing in the world of oil pricing around the world right now.
Yeah, no. I mean, we will talk about the motivations behind. I think that for another podcast, the motivations behind this ESG movement. There's some interesting nuggets because, as an investor, as a pure investor, if I want to expose myself to wind energy, why do I think British Petroleum is the best way to do it? If I have $1 million, Stu, if we have $1 million, Stu, and our mandate was we're investing in wind energy, we say we're going to take this $1 million and put it to work in wind energy. Why, for 1 second, do I believe a company named British Petroleum is going to have any idea how to profitably manage whether it's offshore or an onshore wind farm? There are plenty of other places to put that capital.
Exactly. Well, yes.
So that's where there's this prisoner's dilemma, I think, with oil and gas companies. Like, do oil and gas companies need to be focused on transitioning? No, they need to be focused on emissions and this idea of net zero. How do we continue to produce, whether it's responsibly sourced natural gas, whether it's net free? I don't know. But yes, Oxy's doing some interesting things that I know people are laughing at. And, it is funny to see wind farms in the Permian. But I mean, that's what I think the focus should be, is how do we reduce emissions while still producing, because it can be done.
I am all about ESG and having it done. Good management, good numbers. We've said for a long time. How about good management, good numbers? Let's take care of the environment. Let's take care of the poor. I'm sorry. I'm a little bit on the green side on that. Let's take care of the poor. Let's take care of the green, but also let's give back to the stockholders. It's not always good decisions made. So sorry.
Well, I also think that, there's a whole nother argument, but I also think, the ESG movement has largely been focused on the environmental when I don't think oil and gas companies will ever appease an
No.
environmentalist. If an environmentalist lists 10 things and
Hey,
oil and gas solves all 10, they'll just come up with another list of 10.
besides
So,
having a iPhone, and energy and Sandstone has a energy newsbeat app, I would like to challenge anybody, green energy, anybody else, if they all like their iPhone, raise your hand. Everybody do that? Okay, everybody got your hand up? Now,
yes.
try using this without natural gas, oil, or any others. If you like your iPhone, you're going to have fossil fuels. So, anyway, if you want to see the app, you got to have fossil fuels. And I think that's absolutely hilarious. Sorry.
Yeah, no. So, I mean, if you ask an environmentalist to solve, if environmentalist says, Exxon, you need to do these 10 things, and Exxon does those 10 things, they're just going to give them another list of 10 when they're complete. And so, really, where oil and gas has failed is in the S and the G part. We've thought it's all about environment. Yes, uh, emissions monitoring, emissions reductions, but there's really an S and a G part that we've swung and missed
Yes.
on horribly. And governance has been horrible. I mean, this is well documented. Wall Street Journal came out with an article this like 18 months ago on the horrendous pay for absolutely abysmal returns. Like,
Right.
oil and gas, so we've covered that at length.
Oh,
So
absolutely.
I think this whole, we most people just talk about it as environmental issues when really there's a whole other 66% that never gets covered. But along with this ESG stuff, we have to talk Bitcoin for a second, because we had this article, well, people always want to talk about what's the biggest way to reduce emissions in oil and gas. What's the biggest cause of emissions? That's really the first step. Well, a lot of it's flaring. The oil and gas is a huge problem, specifically in the Permian Basin, with flaring natural gas.
Yep.
We've spoke at length about this. The issue is more so not necessarily that there aren't pipeline capacity available. It's poor planning. There's enough pipeline capacity theoretically. We just need to plan better and not just drill, baby, drill, 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 and we don't know where to put this. So it's been hot recently. I've been seeing this everywhere. Use flared gas to mine Bitcoin.
Ooh,
Let's
that's a nice little ring. There's a meme waiting to happen there, dude.
Well, no, I mean, there's a lot of companies that do it. There's a company called Caruso Energy, who they make a whole
Yeah.
business. They make mobile supercomputers that attach to your wells, mine Bitcoin while it takes your using the flared natural gas. People are setting up operations all throughout the patch to connect basically long lost natural gas wells who've been flaring 80-90% of their load and mine Bitcoin.
So they can get tax credits.
Well, no, it's so do you have a Bitcoin? I mean, Bitcoins are valuable. Bitcoins? $53,000 right now. One Bitcoin's $53,000.
Wow.
Here's my issue. I, and I've been seeing everybody. It's the new hot thing. I think it's not swift, and I would advise oil and gas companies, if they're watching this movement, to do not insource this. If you decide to use Bitcoin mining to mitigate flare gas, just hire somebody to do it. Do not attempt, by all means. Run as far away from you can as the blockchain. Do not, under any circumstances,
Don't try this at home.
to become Bitcoin miners. You've shown zero ability to do your current job very well. Let's
That's
not
funny.
attempt to mine Bitcoin now. It just, I'm saying buyer beware. It's become the new fad. Everyone's mining Bitcoin. Everyone's got a Bitcoin farm in their closet. Everyone's got 3 servers, you know. But just buyer beware.
That's funny.
Hire somebody to do it. Hire a company to do that. I said there's a company, Crusoe Energy. They're doing this. Just hire them. Hire a company. I'm sure a lot of companies doing this. Don't do it yourself. Don't do it yourself. Please don't. I just beg you. What are your thoughts, dude? Do you like the idea of mining Bitcoin with flared gas?
It's a great idea, dude. But on the other hand, if you take a
Why?
look at,
Why is it such a good idea?
hey, if Putin can sell trees for carbon credits and he just takes the money and nothing's done, or Elon Musk can sell and make most of his money out of carbon credits, why can't people go ahead and get some ESG thing for mining Bitcoin out of flared gas? It actually means nothing to the world of ESG. It's going to mean zero to climate crisis. Absolutely zero. You take a look at the flaring.
It just feels scammy.
It's scammy. It is incredibly scammy. Let's take the amount of flared gas out of Iraq and Iran. No matter how much the U.S. stops flaring, those 2 countries alone are going to keep expanding it. China, no matter how good they say they're bringing out energy, they're bringing all energy online. They're adding 5 new coal plants in the next 2 months. You got to be kidding me. Oh, China's green. No, they're not. They're about as green as my...
China's no doubt not green.
No, they're about as green as my black belt when I got a black belt from Taekwondo. There's no way.
Speaking internationally, what's been going on? Give us a quick 30-second update. I mean, the biggest story really that's happened since January was Ever Given.
Oh, wasn't that
Suez
funny?
Canal. It was fun. I missed the memes.
Oh, the memes were absolutely a hoot. That poor old, we had a meme fest on Energy News Beat meme headquarters, man. Stop by for the meme and stay for the news. I mean, it was a zoo going on there. Now, that also let us know, the folks over at Geopolitical Futures let us know also that there is about 5 major choke points. Those 5 major choke points, it was costing billions of dollars every day in lost revenue, in order shipments. Michael, there was a couple places where there were thousands of cows that were dying.
Oh,
I mean, it was not a porculus as we were having in the stateside Senate bills, but it was actually a McDonald's field day out there. Again, anyway, sharks were getting feed, but that is one of the things. Saudi Arabia, just real quick, Saudi Aramco, Saudi Arabia, and OPEC, Oil Plus, and Russia. That has been playing out. Saudi Arabia this year stepped up and hit it out of the park. They cut their production by 1 million barrels per day. Then they turned around, and then Russia has been sneaking theirs up. And now we're expecting that Saudi Arabia this week could be raising theirs back in because everybody believes that the entire demand around the world is going up. So the meetings up this week for OPEC are going to be very, very critical.
Yeah, they're going to have to raise production.
They are.
They're going to need to. I mean, and what's that going to do to the price of oil? I don't know. I'm going to be very interesting. It's going to be extremely interesting.
I'm going to bet that it remains flat. And I'll tell you why. Fundamentals are out the window. So I think there's too much in play right now for us to even guess, but I think it's going to hit back down to 60 for a little bit and it's going to remain flat. There's still a lot of uncertainty out there right now.
That's good news for oil companies.
Yep. Putin wants to shut us down. He wants to shut our great shale players down, and he will do it, but this is not the month.
It's not the month. Well,
you heard it here first.
You heard it here first. All right. Well, what else? I mean, this was. I think we did a good job of really catching. I mean, that's where we stand as of today, in our opinion. We're on the lookout.
We got some great things coming, Michael. Great things coming around the corner for energy.
All right, guys. Well, with that, we're gonna let you get out of here, back to work. Finish up your day. Thank you for checking us out in the Energy News Beat podcast by Sandstone. See you guys later.